Hello, everyone. Thank you for joining us today. My name is Jason Fritton. I am the CEO and co-founder of Patch of Land, one of the leading debt-based real estate crowdfunding marketplaces in action today. Joining me today is Douglas Cochrane. He is my SVP of Underwriting and Acquisitions. He handles all aspects of making sure to keep our investors and borrowers. Today we wanted to go through really quickly exactly what crowdfunding is. Now, I know a lot of you that are joining us today have already have a good grasp of the concept itself and how it works, so bear with me. I'm going to go through a real quick presentation and just give a refresher course on that. But most of the time we'd like to use to be able to go into our underwriting standards. How exactly do we review our projects? We are a curated platform. We make sure that we believe in every deal that goes live. What is the criteria that we actually use? Doug's going to go into depth on that. And then we'd also like to leave a lot of time to be able to answer questions. We've always found that these type of webinars are always best served by having a good, fluid conversation with the people online. There's always a ton of questions, so please, by all means, write in your questions. We're going to start collecting them, and we'll be answering them throughout. So what I'd like to do now is go to our quick presentation. So Patch of Land. We are one of the oldest real estate crowdfunding firms. We launched in September of 2013. Just to confirm here, I'm just making sure that our slides are moving forward. Okay, so what exactly is crowdfunding? Crowdfunding at a very basic level is just coordinating with a lot of unrelated individual investors online that may not have known each other before to be able to commit small amounts or large amounts individually to make bigger projects actually happen. In the past, crowdfunding for investment really wasn't legal, simply because the securities law didn't allow for it. You weren't ever able to really raise funding through public solicitation without publicly registering with the SEC and FINRA and the states, and generally an IPO type situation. And that's always been very, very expensive, very, very burdensome, and made it very possible to get smaller projects through, similar to what we actually do. But since the SEC enacted Title II in October of 2013, crowdfunding for investment has been growing steadily. Very, very quickly. There's been an enormous amount of increased interest in it, both on the regulatory side, on the VC side, and the borrower investor side as well. So we've been very proud to be on the leading edge of that. What is valuable about crowdfunding? Why is this even necessary in this particular market? Most of you, if you're familiar with real estate at all, that trying to invest in real estate has been very challenging. You've been required to have a lot of money. You have to have a lot of time, a lot of experience, a lot of knowledge. You have to have the right connections, honestly. It hasn't been an activity for, let's just say, casual investors. It's always been a very, very committed, very difficult asset class to break into. However, it's always been one of the most lucrative. Crowdfunding really helps to solve this by retail investors with dozens or hundreds or even thousands of other investors to help make individual projects happen. The advantages of crowdfunding are quite simply that our individual investors have access to these type of opportunities where they didn't before, and they can commit small amounts of money. On our platforms, as little as $5,000 into any particular project, and it's all backed by first position liens on underlying real estate. It's not just money going into thin air or to a concept or to a yogurt stand somewhere. It actually has something, hard asset backing it. But there's also risk of crowdfunding as well, in that everyone needs to be able to do their own due diligence. And Doug is going to go into that more a little bit later to talk about what we do first. We try and take a lot of the risk out of it, and there will always be risk. There's always the risk that you may lose some or all of your funds. These are an investment, but we work very, very hard to make the investments as safe as possible. So the opportunity in our market exists because there's historically been a massive, especially recently, a massive gap between traditional financing institutions like banks, large banks, and who has traditionally been funding these commercial opportunities, which are hard money lenders, private money lenders, and small, fragmented, opaque, mom and pop lenders that tend to exist in a very hyper-local geography. They tend to be very unreliable, and in certain ways they can be very predatory. As any of you that have received a mortgage in the past, at least in the past 5 years or so, you know that it can be extremely difficult to get, and it can take an extremely long time. And with high opportunity commercial loans, sometimes a project needs to be funded in as little as 5 days or 10 days or 30 days. You don't have the 6 months that it would take to get funded through the big banks, versus if you can't work with the big banks, who do you work with? And that's really where we come into play here. So we're able to be a very transparent, online, national platform. We're able to invest and fund into New York, and fund in Los Angeles, and fund in Miami, and eventually in Paris and in London. We're not quite at that stage yet. We have the ability to reliably fund projects all over the nation. We're currently in 10 states now, and we'll be continuing to increase that very, very quickly. So one of the biggest issues between getting a borrower getting their project funded, or an investor being able to invest in one of the most historically lucrative asset classes out there, is just the disconnect. The investors don't specifically or primarily know a great deal or a large volume of repeat professional borrowers in the real estate market, and borrowers may not have access, especially at the smaller size, until they're large enough that they can get a hedge fund on board or a private equity company on board. They may not have access to a lot of capital. They may not know a great deal of individual high net worth or ultra net worth investors. And we work to actually solve that on our side by providing that access, providing that marketplace. We have thousands of accredited investors on the platform. We now have thousands of highly professional borrowers with a constant need for access to capital all across the country. We have hundreds in every state, basically, at this point. And we're working to match up these two parties to make great projects happen. This is a slide that simply shows that. We match up the investor with the borrower and contribute to act as the essentially the logistics change to make that project happen. So who are our borrowers? Unfortunately, we do not currently work with any first-time borrowers. So we'd love to help people get into the real estate game, but we're very, very focused on making sure that our borrowers have a solid and proven track record. We want to know that our borrowers have the ability to get the project done, that they've done it in the past, or they've worked very closely with companies that have done so in the past. And they're experts in this particular project, in this particular type of work, and they need capital. They constantly need capital. Our borrowers aren't looking to do a single project, a fix and flip in a year. They're looking to do 10 or 20 or 100. And it can be very, very difficult to try and get traditional mortgages in that way. And who are our investors? Currently here in the United States, there are 8 million U.S. households that are considered to be accredited investors. Definition of an accredited investor currently is an individual who has a net worth exceeding $1 million, excluding the primary residence, or they have an income of over $200,000 a year for the past 2 years and expect to make that much this year as well. We have several thousand of them that currently work with our platform. They've been very, very happy. The vast majority of our investors continue to invest with us on subsequent deals, continue to roll their funds over. And the spectrum of risk tolerance is all the way across the board. We've got boomers who work very hard their entire life and acquire a good amount of capital that they want to take control over and invest themselves. We have doctors, attorneys, financial professionals, and we even have, at this point, some very, very large institutional partners as well. So our investors on the platform numbered in the thousands and span the entire risk spectrum. And it's getting big. So as I mentioned, when we first started about 15 months ago, it was very, very difficult. It was a brand new concept. This type of thing hadn't even been legal before. We've been able to see a massive snowball effect lately, especially within the past 6 months, to where the individuals are being accentuated with our family offices, the institutional borrowers, and we're even looking at potential new regulatory environments where we can open this up to not just accredited investors, but to everybody else. So how do real estate operators work with a crowdfunding platform? Well, first off, realistically, you have to decide what you want. Whether you're looking for debt versus equity financing. Patch of Land focuses specifically on the debt side. We made a choice very early on that we wanted to become experts in the debt financing as opposed to kind of good at both debt and equity. We felt that debt was the most scalable and most reliable. It allows our borrowers to have full access to the upside of their property while still giving them good, safe, reliable, standardized terms on the debt side. Actually, this is, I want to end on this quickly with one of our favorite proverbs here that kind of sums up crowdfunding in general. If you want to go quickly, go alone. If you want to go far, go together. And that's really what this is about here. We're actually using the wisdom of the crowd, the strength of the crowd of hundreds of people, thousands of people, to make projects that were traditionally very, very difficult to happen very easy and much safer, and be able to bring the common knowledge of people in different geographies and different specialties together to help push those projects forward. So now I'd like to actually turn it over to Doug Cochrane. Doug's going to go into the more of the benefits of our particular process and how he works with the underwriting itself.
Good evening, everyone, and again, thank you for joining us here. Again, my name is Doug Cochrane. I'm Senior Vice President of Acquisitions and Underwriting at Patch of Land. And as Jason was talking about how crowdfunding has been gaining momentum, it is important to focus on the deal and developer quality that's coming across our desks, and the reputation of the portals are paramount to this industry. And underwriting is a key factor to ensure that the safety of all parties involved are in line. But first, before I go more in depth into the actual underwriting that we do and our due diligence, I think it's a good time to also kind of talk a little bit about the benefits of using an alternative lender, like a crowdfunding source like ourselves, as opposed to a conventional lender or a local hard money lender. And for our borrowers and brokers that we work with, a lot of the benefits are we're an easy loan process. We are a technology-based company, and from start to finish, we do work within technology to help ensure our due diligence and our underwriting, and that the process is a smooth process for every deal. We also have an access to a large pool of capital that a lot of lenders wouldn't. The local hard money lenders typically have a limited access to capital, whereas we have a much wider pool to draw from, so there's always money available. We also have our speed and reliability. Our typical loans start to finish are about 10 days, 10 business days, and we've closed loans in as quickly as 5 days. The speed of the transaction, which is typically paramount to our borrowers, we're able to accomplish for them. Our due diligence and our make sense underwriting. We do a very full and thorough due diligence on all our borrowers and their properties and the assets, as well as we also, along with our guidelines and our matrices, we also put a lot of make sense underwriting into every loan that we do, because every loan is different. We're very big on exceptions and making a loan be very whole and balanced. So that's a big part of our underwriting. And we also have complete transparency, and that's both to all parties involved, the brokers that we work with, our borrowers, as well as our investors on the other side once a loan is funded. We have no hidden fees. What you see is what you get. Typically, the only thing that a borrower is going to pay for up front is an appraisal, and that's when the appraisal is ordered and scheduled. There's no prepayment penalties on any of our loans. So if you've got a 12-month loan and you're done in 9 months, congratulations. And we're also big on building relationships. They matter to us, and that goes for both our borrowers and our brokers. When a broker brings a borrower to us for our underwriting, they keep the borrower. I'm very big on that because we want to help build that relationship. And it also matters with our borrowers. We want to build relationships with them so that they keep coming back to us, and we want to be their lender of choice when it comes to each and every one of their projects. So this is a relationship building process for us as well. And I think a lot of that does go back to our transparency and our ease of underwriting and make sense underwriting. And again, part of that relationship building is, once you've worked with us once, the first time you work with us as a developer, we do a thorough background check. We do all of our due diligence. So the next time you come with your second, third, fourth property, we're really just looking at the asset itself. So the process is, again, even smoother second, third, fourth time around. And it's also an opportunity to build your brand. And that goes with our broker communities. That it's another portal, another avenue for them to bring deals to fruition and capture more business and to build their brand, and also for our developers in order to build their brand in their within our community of the patch of land community. When a borrower has a deal on the site, our investors get to know that person. They get to know the kind of work that he does and the quality of work and the kind of projects that he's into. So when he comes back onto the site, his deal is, our investors already know you and they're willing to invest in you once again. So again, it's about building your business and your brand even within the patch of land portal. There's a number of benefits also for our investors, and I'll turn it back over to Jason to talk a bit more about the benefits for our investors.
Sure. Actually, so primarily the first benefit is that you get to diversify your portfolio to real estate. So, an asset class you may not have access to before without putting out hundreds of thousands of dollars or millions of dollars in a lump sum. With us, you're able to split up your funds into several different projects, many different projects, as little as $5,000 a piece. You get a level of diversification, both between projects, between geographies, between asset classes. So that there's a great deal of diversity there that you can directly control that you haven't had access to before. As I mentioned before, we're in about 10 states now, and we are spreading very, very quickly across the country. We're expecting about 25 states here within the next 2 quarters. We're well on the way to that particular milestone. Our yields have so far been very, very strong. Currently, you can invest in projects that anticipate yields between 10% annually and 18%. We're currently averaging about 12.4% right now to our investors as far as yield is concerned. We do pay monthly. So as our borrowers, our developers pay us per month, interest only, we distribute it automatically out to your accounts as well, at your pro rata portion. And we're transparent. If we have due diligence information, we've underwritten a project, we put it online for you to see as well. So we're able to display everything from the appraisal that we do on every project, a full walkthrough appraisal, to market statistics, to school district information, to crime maps, anything that we may particularly have on that particular project, we make sure to communicate to our investors as well. So to really allow you to relate to that particular project. And we work very hard to keep your information safe as well. We have full, secure bank level encryption, and we're continuing to build that up. We're getting to be very cognizant that you're trusting us with your information, and we work very hard to keep you protected. When you choose to reinvest, it's very easy. You can invest from your couch in your pajamas within 2 minutes, completely online. We're one of the only platforms where you can complete an investment in real estate from start to finish in 2 minutes from your mobile phone, and still go through all the due diligence information. And you can feel good about helping to rebuild our communities. We're really working with a lot of the smaller developers, smaller, very professional developers, to help reclaim communities that have been significantly damaged by the past real estate downturn. They're roaring back now at this point. So we've got some great projects that you can help fund. So I'd like to turn it back to Doug to go into our underwriting a little bit more.
So getting into the nitty-gritty in the underwriting at Patch of Land. Like I had mentioned earlier, we do a lot of make sense underwriting. We do have guidelines, and guidelines are meant to be worked with, and there's always exceptions to our guideline rules. Some of the things that we look at when we're initially looking at a deal is the experience of the borrower. We typically want to see we don't want to work with first-time borrowers. We want to work with people who are experienced, and typically we're looking at somebody who has done something like 5 deals in the last 3 years. It's somebody who's been involved in real estate in recent years and is getting traction. They know what they're doing. They've had a couple projects underneath them. They've found some pitfalls. They know what to expect. That's what we want out of an experienced borrower. And again, that's a rough estimate, but that's something that we're looking for. People who are maybe less experienced, we would encourage them to bring on a mentor or a partner who has more experience. Perhaps it's a general contractor, a local realtor, somebody who they have a good relationship with, who brings some experience to the team, and to help mitigate any risks on our part, and to help strengthen what they're presenting on the experience end of things. Then once we're comfortable with that, then we want to start looking at their backgrounds, and we do a full background check on everybody. We do a full due diligence. We do look at credit reports, but an important thing that we do here at Patch of Land is we're not really credit score sensitive, and by that I mean we really look at the individual lines of credit and the history of the credit, because every borrower has a story and everybody is different, and anybody who's been a real estate developer for any length of time, 10, 20, 30 years, they've had some ups and downs, and we do expect that, and it doesn't frighten us. We really look at credit to show a story. We will look at people who have had past bankruptcies, foreclosures. We do want to make sure people haven't had those in the last 2 years. Everybody's got to be clean within the last 2 years. No mortgage lates in the last 2 years, no bankruptcies, no foreclosures. But we will look at the entire credit history of a borrower in order to get a full complete history of that. And again, that's part of our comfort level and part of our make sense underwriting. We also once we're comfortable with the borrowers, their backgrounds, their assets, their credit, we're really kind of focusing on the asset itself. And the first thing that we want to do is get an appraisal. We always get full appraisals by a state licensed and or certified appraiser for each state. We're really looking at two things. We want to have an as-is value and a subject to value. Most of the properties that we're looking at are going to be renovated, so we want to know what kind of value that you're getting at the time of the purchase. Are you getting a deal? Is there built-in equity on the property? And what's the market value going to be after renovations? Because we do look at those two numbers when we are lending. Then we start getting into loan to values, ARVs, the after renovated values, and then we're also looking at the loan to cost, or the LTCs. Typically, as a general guideline, we're looking for about a 65 ARV on any property that we're going to lend on. That number can go up or down depending on other mitigating circumstances, such as a larger down payment. We'll go with a slightly higher ARV. If it's a smaller down payment, we're going to look for a lower ARV to help mitigate that. LTVs, we're typically looking at about an 80% loan to value on the purchase. And then we're also going to look at, especially on larger renovations, we're going to be looking very closely at the loan to cost. We typically want it to be somewhere around 85, no higher than 90% on a loan to cost basis. So we really look at all three of those when we're looking at a loan. We're looking at all the different mitigating issues that go against any risks that are potentially there. And then we're also looking at, once we're comfortable with the asset itself, we are looking at, as Jason had mentioned, the neighborhood, the areas. What's going on within that city as far as the real estate? Is it going up? Is it going down? Is it stable? Amenities that might be nearby. We're looking at properties that can and will have a very strong exit strategy. At this time, we're not lending on anything that's in a rural area. We are looking at major cities and suburbs. And places that have solid populations and solid growth potential. So we're really looking at the project as a whole. And a big part of that is, and with any experienced developer, they are going to have a solid exit strategy, whether it's going to be to sell the loan after the renovation, if they're going to hold on to it as a rental property, that they refi out of it, and that they have a solid exit plan for that. It's something that needs to be discussed up front. Our typical loans are a 12-month loan, interest-only payments, no prepaid penalties. For larger renovations, we can extend that to 18 months. But we really try to work with the borrower and their needs. We can also do a 12 months, 3-month loans. We do transactional funding that's under 30 days. So there's a lot of variety of what we offer and different levels of underwriting with each. Again, one of the bigger things for us, believe it or not, we can get it all done within 10 days. So there's a lot of flexibility with working with a company like ours and in the crowdfunding industry. At this time, I'd like to try to open this up for some questions, if anybody has any.
So I actually see a first question here. Can you explain how the equity crowdfunding movement is happening? Is there a law that allows for this to happen on the federal level? And yes. So in 2012, the Jobs Act of 2012 was passed. It was mandated by Congress to allow for certain crowdfunding exemptions that allow for full public solicitation of securities. and to a certain degree to allow for the participation of all investors, not just accredited investors. And they were separated in several different acts. So far, just Title II of that act has been enacted by the SEC, although we are expecting Title III and Title IV here, hopefully in 2015. Title II extended the Regulation D private placement mechanism to include Rule 506C, and that allowed for full public solicitation. With the Reg D mechanism, the trade-off there was that the issuer needs to verify the accredited nature of the individual investors. We are a 506C platform here, so we work with our investors to verify their status. They're able to invest freely at that point. Title III, which is not yet in place, we're expecting that hopefully later this year, allows for platforms to work with all investors, not just accredited, not just previously wealthy investors on an equity crowdfunding basis. There are a lot of safety mechanisms associated with that. The SEC is still just finalizing exactly how that is going to be written into the regulations, and it may be very burdensome. It may not be. We're watching that very closely to see how that actually turns out. And then finally, Title IV, which is a bit more straightforward. It creates a regulation called Regulation A+. It's almost sort of a mini IPO to replace Reg A. And we'll be able to work with that in a much more straightforward way. But that regulation does not yet exist on the books. The SEC still has to release that. So the second question here says, Doug, can you explain the process of getting a loan with a patch of land? How can you be sure that investors are going to put the money into the loan and that a borrower have a risk of not getting funded? I'll let you take that one.
Sure, thanks, Jay. So the process of getting a loan with patch of land is very easy. You go to our site at patchofland.com. Click on the borrower button and sign up and submit your loan scenario through our web portal. It'll then go to one of our loan officers. They'll review your summary and contact you directly to discuss your loan in more detail and to get some more information and get the loan started for you. So it's a very easy process, and it's a very personable process. We want to, again, we're about building relationships, so I think it's an important part of what we do here in establishing our relationship with our borrowers, and also being able to have a chance to really explain what we do and how the whole process works. As far as how can we be sure that investors are going to put money into the loans, that's a great question. Whenever we're underwriting a loan, myself and my team of underwriters, once a loan is finished being underwritten, one of the big questions we always ask is, would you be willing to put your own money into the deal? And if the answer is yes, then the deal will go through, and we're confident that our investors will be excited about investing in your project. A big part of that also is, the continuing question says, does the borrower have a risk of not getting funded? The loan will get funded. It's a big part of what we do is our pre-funding mechanism. We were the first to do it and the best at doing it. We will table fund your loan at the closing table so that you can get money to purchase your property and get started on redeveloping your property, or if it's a refi, to go ahead and start your renovations. You don't have to wait for the crowd to come and invest in your property. We've already done it. So you can, again, it's all about how quickly we can respond to your needs. So after we've closed on your property, you've started your renovations, we've already put it up on our website to open it up to our accredited investors for them to invest in. So once we have confidence in you and your project, it will get funded. And the next question says to Jason, what are some of the steps that you're taking as a company to grow responsibly? As an investor, I want to know you're going to be around. You want to take that one, Jay?
Sure. So we've always been very responsible with the funds that we have on hand. We've been able to grow this to a team of 21 very highly skilled individuals on essentially a shoestring budget. We have a great product, and we're a combination of a slightly better built mousetrap and paradigm change here in the financial world. And so we've always had a great deal of traction for this particular product, and we've been able to outlay our existing funds very carefully in a very responsible manner. That being said, we've just now finalized a funding round. So we raised $3.4 million in convertible debt. We actually have some additional funding on top of that, which unfortunately we can't talk about yet. But we have a great deal of runway still around for us at this point. And we've been doing well enough and growing quickly enough that we're actually within sight of being strongly profitable at this point. We do anticipate that here very, very shortly. Our growth trajectory has been perhaps some of the strongest in the industry here. And I wouldn't expect us to fall off the map anytime soon. So our next question is, are you currently in South Carolina? If not, when? Doug, how about you handle
that? We are currently not in South Carolina, but we would love to be in South Carolina. The question is from Marianne, and Marianne, if you have a project in South Carolina, please bring it to our attention. You can bring it to patchofland.com, or feel free to email me directly if you'd like at doug@patchofland.com. I can take a look at it and we can talk about your project. But we are open to going into most states at this point. We're currently in 11 states. We're looking to expand, and so we welcome most every state, and certainly South Carolina would be a wonderful one to get into, so please bring them our way.
So that looks like
actually, let me just, if I can, my email address again is Doug, D-O-U-G, @patchofland.com.
And that looks like all we have for questions right now, folks. I do want to make sure that I do give you my contact information as well. You can reach me at any time at jason@patchofland.com. That's Jason @patchofland.com. Please, by all means, consider this an open invitation to either call us directly or to email us. We will be in Dallas this weekend at the REI Expo. We will be demonstrating our platform there. We will be around to talk. I'll actually be giving a lecture on Saturday and Sunday about crowdfunding as a whole, and I'd love to see you there. So thank you again for joining us today. If you have any additional questions, any concerns, any suggestions, anything at all, please reach out and touch base with us. You can reach us at patchofland.com. And we're always looking for new borrowers, we're always looking for new brokers, we're always looking for new investors. We'd love to talk to you. You can read our blog at The Patch on patchofland.com, download our white paper, and please contact us at any point if you'd like us to consider your project or you're interested in investing in one of our talented borrowers and developers. Thank you very much, everybody.